Hello, ladies and gentlemen, and welcome back to another video. Today we have missing fails to deliver data from the SEC. We have the GME community is healing after no V for Vendetta hype dates, a model update, a potential second swap, and at the end of this video, we're going to do two power packs opening. So I hope everyone's doing well. First things first, this is not financial advice, never will be. I am not a licensed advisor, and this is opinion content only. With that understood and out of the way, first things first, I wanted to get to this hilarious XRT event yesterday. We had and this is an ETF, by the way. You do not see price action like this on ETFs with no news. This is a 3% day on its highest volume. Let's look at the 1-day chart here. This is its highest volume since, wow, April, when the market was at total rock bottom lows. The tariff fears were freaking everybody out, and XRT then, went on a monster run. If anyone's like, why are you talking about XRT? It's typically a sign that they are cleaning something up here, some shenanigans. So we did not see any type of volume on GameStop yesterday. We didn't see corresponding price action, but we did see another deep low. So I wanted to speculate, and again, that's the key word, speculate, that this might be a double swap. And, you go back to this time historically, early November, and, you can do it from previous years, you can do it from, way back, but we have gotten lows here in the past. We have gotten a lot of swap activity in lows. Richard Newton, obviously the purple swap that was on here, definitely there on a 1-year cadence. I mean, again, you can't bank on these things with certainty. I think that's dangerous, but you can see the exact same low the previous year. That looks like a 1-year roll. They rolled it here, did the same short hedge, immediate relief. And see, that's key to immediate relief when that's done. When they're done hedging, boom, pop out of there, and you got what, a 10, 11% move? 13%. So, that looks like a swap. Now, this could be, you can see aggressive shorting here again. So it's possible. Now, quickly, I would never, ever, ever, ever make a financial decision on that. I have bought a few more shares. I mean, we're talking like low quantities in this range because I want my cost average to be lower than it is at this moment in time, but that's neither here nor there. This is something that we're going to keep an eye on. We can start to put it on and maybe as a 6 or 1-year cadence, but clearly looks like there's something more to the scene here. In other news, the SEC, and again, we don't want to call foul here. Let me know in the comments below if you trust this data. If you don't, do you think it's a coincidence that the data is missing? But we have not gotten our fails to deliver data for the the first half of October. It's been missing for 6 days. Now, the first thing that a lot of people are rushing to is the government shutdown impacting this lack of fails to data? It looks like it might be. I'll give you the kind of response here from AI, again, which of course we're taking with big grains of salt, but it's essentially saying it should not stop the submission of fails to deliver data to the SEC since the filing system remains fully operational. I mean, it's literally just uploading data, and then the SEC uploads it to their site in a zip file, which is hilarious in and of itself. Now, companies still have to adhere to these deadlines. Well, the SEC employees are furloughed and they're short-staffed. They're a skeleton crew, if you will. Companies still have to report. Companies still have to file news-related events. They still have to file everything buttoned up through Edgar, and it's still being able to upload to the system. So they're saying here, when filings are accepted by the system, publication review or staff-assisted processes can be postponed until the government fully reopens, causing possible delays. So let's take that for what it is and say that it's related to the government shutdown. This is the longest it's been delayed. The longest it's been delayed since October of 2023. Now, 21 days late there. Okay, let's go back just for kicks and just take a look and see what that looked like for GameStop. I always find this very interesting. Same price action. Okay, besides, a little blip here, but same total shorting swap season, definitely 2 swaps here, right? Government talking about a shutdown kind of all the way through November. And then right before earnings, hey guys, let's clean this up. They might have a good report. Bang, 55% off the lows and up. Okay, so something is going on here, right? This is not normal. So let's not see the fails here. We don't want to see the fails. The ETFs are all blown up. This is aggressive shorting and swap season. Oh, we got to clean this up. 56% out. So is that going to happen this year time? I don't know. You can't, I think anyone that, and again, I'm very weary of anyone talking in certainties when it comes to these things. I'm saying it looks like that's likely, not a 55% move up, but that there's aggressive shorting. It's a coincidence, a funny one at that we can't see this data. But I think anyone that's taking aggressive options trades on this, or that's putting a lot of capital to these things, I think that's rather reckless. And I'm not passing judgment on people that do that. I'm strictly speaking for a community in which I said at the beginning of this video that I think is healing. And I don't want to see regress, because V for Vendetta in years past has been a hype date with the community. I think we all know why. I didn't see any of that posting this year, that crap posting this year. I saw zero, nothing, nada, zilch. And I think that is powerful, because this community is filled with the smartest people, in my opinion, in the stock market. The inner workings of the stock market, they have a very good understanding of. Swaps, they have a very good understanding of. Fails, settlement, all of these things I've learned from the GME community, but there's still people in it that, love hype dates and this and that. And I like them too. I like to read them. I like to look at them, but to make a financial decision on anything related to that is crazy. And the same for aggressive short-dated options plays. I think that's just absolutely crazy. So that's kind of what's going on with the fails data. I'm glad the community is healing from some of that stuff. The most important thing, and I think this is what I really wanted to emphasize. So when we don't know what swaps are doing, we don't know the exact days that they finish. We don't know if there's a third or a fourth or a fifth or an infinity, right? But what we do know is, looking at 13F filings from institutions that are going long on GameStop, we can look day after day that institutional ownership continues to increase. Why does that matter? Because institutions, and for whatever, let me know in the comments, do you think there's any shady business going on here? Or are they just lending their shares out? That's something I hear a lot. Either way, it signifies that institutions see value with GME. GME stock is at an attractive price point potentially for institutions. How do I know? Because they increased their share count on November 4th by 420,059 shares. On November 3rd, they increased their share count by 160,844 shares. And this is net all the 13Fs that come in on that day. This is from Quiver Quant. You can use Whale Wisdom. It doesn't matter. It's the same stuff. They're just pulling from SEC filings. This is official numbers. We want to see GME's institutional ownership continue to increase. At the end of the day, when the bad guys are playing on the same team as the good guys, and that's usually an indication that, hey, we all want to make money, right? As the institutions, let's go aggressive long. Let's buy calls. Let's pump this thing up. Let's start the presses. Let's put out decent publications, decent media headlines for GameStop. Something that we haven't seen, by the way, for a long time. We've seen some like fringe stuff, like Seeking Alpha puts out a buy rating, and the Wedbush clowns and crooks, the Wedbush people, removed their infinite sell rating on GameStop. But, of course, the stock doesn't react at all. But then when, JP Morgan raises the NVIDIA price target another $5, it's up 10% off that. So it just doesn't make any sense. But we want to see that. We want to see institutions pile into this thing. We want to see that pressure. Yeah, it's probably all being dart pool, no price discovery, but we want to see that number increase. The more Wall Street players that are in on this thing, in my opinion, the more likely they are to run price upwards. Now, otherwise, general market, I did want to say crypto typically preceding, and I have some drawings on the Bitcoin chart here. I thought we were going to bounce off the simple moving average. We did not. We crashed through it. However, the 4-hour chart on Bitcoin is looking like it's going to or very close to crossing up on the PMO. Look out for this. If it does, this is a pretty deep low for Bitcoin to be crossing upwards on. This could be the start of something explosive. Again, using words like could be because who knows in this kind of macro environment, but that's encouraging. And crypto high risk assets, obviously I think there's, my opinion, they're a little bit safer than high risk now, but now that institutions have piled into those too. But that usually would precede, I think, a nice little pop for GME. Technical wise, GME, you're just looking at nothing. You're looking at aggressive shorting. This is market mechanics. This is not technical analysis. I think anyone is smart enough to understand that. If you do look at the technicals, again, you're looking at a situation on the PMO. It has not crossed yet. It's getting close on the 4 hour with extended hours on. So that's a bit of good news too. Going back real quick to the FTD data, we need this data. We need to see what's going on in the market, and we need to see what's going on behind the scenes. And we're not seeing that. Typically, you can see, big fails September 23rd, coming due October 28, 12.5 million notional on that. I mean, that's important to see. It's important to see when they're struggling, what they're doing, what other tools, what ETFs, XRT, GMEU, IJJ, IJH, where are they going? Where are they using? Where are they kicking at TDs? That is very important information that we absolutely need access to. Now, the model, let's do a quick model look. Richard Newton says that he's no longer using a spreadsheet. I think that's fine. I think that's wise. I do think it's a little premature, but I would defer to him on what he thinks is best. I'm still looking at this. Someone on Reddit is still updating this. This data here, the ETF creation and redemption data, is imperative. They did a little creation on XRT on November 5th. Obviously, we saw those big green candles at the beginning of the video. Something's going on there, but still redemption across various ETFs across the market. GMEU, the thing is still on reg show. I just can't. I can't even talk about it without getting angered. But that's neither here nor there. You can see they're still redeeming. So we want to see consistent creation for the span of a couple days at least. And we want to see XRT get back up to the 6, 7, 8 million shares outstanding type of range, I think, for some really good potential price action on GME. So what's the model saying? Is it even worth looking at? Well, I like to keep people posted on it because I think there's some semblance of like, okay, it's not saying there's a big move coming, especially this dip before earnings in December, I think is really interesting. That's what the model's saying. Now, the model is now accounting that we are in swap season. So, would that be 1 swap, 2 swap, 3 swap, 4? I don't know. I can't tell you. But the other model, the newer, kind of more nimble model, is showing that there could be some nice little price discovery up to 25-ish coming soon. And that would be November 21. Again, this, you just cannot bank on these things. This is being updated constantly by someone on Reddit. They are actively making tweaks to it. I think it's worth looking at, like I said, for the ETF and creation redemption part of this, and also for the fails to deliver. But we don't have fails to deliver anymore. They're gone. They're not coming. It's a missing milk carton image. They're not here. So we have to rely on our old-fashioned tools, which is TA, gut feel, and that's why I think pounding the table with institutional ownership and with Roaring Kitty's cost basis, whereas Ryan Cohen bought in the past, those things you can fall back on. You can look at the options chain. I do every minute of every day. There's not a lot there. In previous times when we've seen big runs in price, like this April to May run, we saw a lot of $35 calls popping off in early May. And then what do you know? We went through and those got in the money. So, I think people know kind of what's going on. Not everyone's extremely privy to it. Roaring Kitty's silence probably makes more sense now. Roaring Kitty unfollowing Ryan Cohen. Let me know what you think about that in the comments. A while ago might make more sense now. Maybe he's signaling it is not the exact moment where something big is going to happen. But I still think personally, my gut feel, opinion only, I still think we're going to see some price relief. And in honor of, the Power Packs announcement on Thursday, I will be opening a couple packs here live for you guys. And I wanted to do that too as kind of a way to not only support the company, which is crucially important to this whole thesis, by the way. But instead of YOLOing into options and doing things that are extreme high risk, I would like to at least try to make a little money on cards while supporting the company that I am fully invested in, which is GameStop. That's why I'm going to open up 2 power packs here, starting with the silver pack for football. And I'm doing this too in honor of, oh, drum roll, please. Hang on. Chicago Bears. Is that Caleb Williams? That's a good card, right? $28. Oh my gosh. The Bears are still in purgatory. Wow. Okay. I mean, we're going to have to sell that back. That's a bad, I'll accept that buyback. That's a tough one there. But you can't win them all. I am doing this too because the addition of baseball and basketball, I think, is super intriguing for GameStop. I think this is a great idea. You can see the revenue funnel right away. I'm going to now do a Pokemon silver pack. I'm going to use, I guess I'll just have to charge the card again, and then I'll use my balance for maybe a little bonus pack if we have money left. I've done this before. I did a couple of videos on X about this. I got some really good pools in the past off ripping a few packs. So that is I think a nothing burger there. Oh, whoa, Mimiku. Sorry, I'm not good with Pokemon, but that's good. $71 off a 50 pool. That's solid. I actually like that card. Let's just for the scope of the entertainment, let's accept the buyback. And I would, if I get something really great, I kind of wanted to keep that personally. If I get something really great, I would probably do, keep it in the collection. But now we've got $83 in the account. I think we spent $100, so we're still down a little bit. But let's hit it back on a silver spin, rip it, power packs. You can just see this is like a revenue generation machine here. I can see this being huge across streaming platforms, Twitch, YouTube, etc. What do we get here? No idea. This is a Japanese card. And there you go. The money's gone. The money's gone. So let's sell that back, accept the buyback. And we can probably do one regular pack now for $25. We have $63 in the vault. You can this is really cool. So we can do one more silver actually. Let's go ahead and do one more silver. Pokemon or football. Let's do football. I'm feeling football. But the addition, like I was saying, the addition of baseball and basketball, it's just going to get more people involved. I love baseball cards. I have a collection of physical cards from when I was a kid. Drake May, hang on here. Mint. Okay, 65. I mean, that's a good card. So, I guess this guy could be a Hall of Famer one day, right? He's a young player. I think I'm going to go ahead and keep this in the vault. Or do a TBD. If you guys want me to do this more often and more packs on video, I can. But I think it's a like I said, this is a actual revenue generation stream for GameStop, and it's gotten next to none coverage from mainstream media outlets, from financial publications that see the value here. Collectibles is up 33% year over year, and you hear nothing, not a zilch. Is that coordinated? I don't know. I like to think so, but we can't say for sure. Just like we can't say for sure about the swaps, we can't say for sure about the model. I am hopeful we're going to see a bounce and relief in price, but hang on to your seats. Let's hope for the best. Go GameStop, and thank you again for watching, for leaving a like, for subscribing. You guys are awesome. I'll talk to you again real soon.